This is our Forex blog for April 16th, 2012. I spent about 3 or 4 months redoing our website. It was about 2.5 years since I redid it, and I also rewrote our manual from scratch. For the last month, I've been back to trading, and that's one of the reasons why we've released last week the new Pivot Score Daily, Weekly, Monthly trend, which I feel is better than the older one. And I'm continuing to try to improve our tools so people can make more money trading in less time. A lot of people only have an hour, hour and a half to trade each day, and would like to sit down in an ideal world and make 15 to 25 pips. What I'm working on right now should help them do that, as well as myself. I have a 2.5-year-old boy, and I love to spend time in the mornings with him when he wakes up, and I like to wake up early and trade, then work out, play with him for a couple hours, and then work the business in the afternoon. I'm sure a lot of people have other reasons or even similar reasons to want to do the same. So therefore, to make 15 to 25 pips in an hour, you not only need incredible accurate tools, but ones that are also very quick in identifying new trend directions. So this is what we've been using for years. It's our currency meter. It statistically analyzes every currency to every other one. And on the top, it is made up of 5 of our best statistical tools. 3 of them measure the direction, 2 of them measure the intensity of the direction. And this is basically plotted as a histogram on the bottom of a chart, which I hide. You don't look at it. It's above there, but it's just hidden. That's how we do this. And you can see it's using a 5-minute bar. So each one of these histograms is 5 minutes. What was the dollar's strength or weakness during that 5-minute period of the day? Most of us have adapted to using range-based charts for our trading. They're superior, they're faster. Our trailing stops and our statistical trend tools work amazing on them, but they only work live. And so what I've been working on is every time there's a new range bar, identifying what the trend is on that bar, and then, when there's a new bar, plot a new one. So instead of every 5 minutes, it's using the range bars. So let me give you an idea here of the euro. You can see that when the euro is really moving around a lot, there's a lot more bars. And the nice thing about range bars are they tend to close the majority of the bars at either the high of the bar or the low of the bar. So usually the peak value of these will be at the high or the low. It's pretty clear here that you want to be buying the euro, and right now it's experiencing very little amounts of weakness. Here's the CAD, which you can see down here on our old one. The range bar charts and the currency meter on that only works live, but it's pretty clear that this is extremely weak as well. And I also noticed one thing as well in terms of when currencies change direction. You can see right here with the Australian, it happened at 12 o'clock. This is the close of the 12 o'clock bar, so at 12:05 this is what the reading was for the Australian. Here's what it looks like on the range chart. And first of all, the weakness kind of falls off a little bit, and it starts way back here at 11:53 of showing a little bit of strength. So you had about a 7 or 8 minute head start that this weakness is over. So basically what I'm saying is what I'm working on right now I believe to be faster, give very similar readings as this, but just quicker in identifying trend changes. The sooner you know that the trend you're in is over, you can get out and lock in more pips, hopefully, and also, spot new opportunities in whatever the strongest trending pair is at that time. Notice the yen right here, lots of strength and a little bit of weakness in here. Here's what it looks like on the range charts. A little bit different picture. Strength, a little bit of weakness, strength, and then right here, it could go either way, and then 11:30 right here, it picks up some weakness, 11:38 actually, because remember this is a range bar chart, has nothing to do with time. 11:38, the yen's the weakest. Let's see what was the strongest at that time. The pound was already relatively strong at 11:30. So the pound yen, pretty decent one, 11:30, 11:38 to be buying. Pound yen. Let's take a look at this. Here's 11:30, and you can see it went from a 127.50 up to the 127.70. Now that might only be a 20 pip move, and a lot of new traders, for some reason think that they're going to sit down in 1 or 2 hours or 3 hours, make 30 to 50 pips every day. I think they're out of their damn minds. I mean, that's just the truth. 10 pips per day can make you rich. Let me just prove that to you. So a 20 pip move is phenomenal in a very short amount of time. This is our trade planner. If you have a $2,000 account, getting just 10 pips per day, starting out doing just 4 mini lots, that's $4 a pip in most of the pairs. Every 2 months, it doubles your account. 4 months later, you have $8,300. Obviously, the power of compounding, you're trading more and more lots. Halfway through the year, you're doing 4.3 full lots. You have a $21,000 account. It's grown 10 times in just a half a year. Obviously, slightly more than 10 times growth, but you can see, obviously, 10 times this at the end of the year grows to an astounding 258,000. That's you're trading a huge number of lots. But the point is, 10 pips per day can do very well. So if you knew at 11:30 to be looking for buys here, our trailing stop's already underneath this, and you just simply bought it when it went above this bar's high right here, in at 127.50. Even if you got out right here, within 11:39, you're in this trade 11:34. If you got out 5 minutes later with your 10 pips, you're done for the day. If that's your goal, 10 pips per day. So keep that in mind whenever you're looking at various tools and systems. Obviously, there's going to be times where you're going to catch big moves. Here's the CAD. Underneath the real-time momentum, we have the daily, weekly, monthly trend. Obviously, starting the day off, the yen was stronger than the dollar. The daily, weekly, monthly trend was super strong. Let's scroll these back a little bit. The euro was strong, weak last night. Swiss was mildly weak on all time frames, and also the Australian. So last night, coming up to midnight, before midnight, you want to sell the Australian yen, you want to sell the euro yen, and also the Swiss yen. Let's just take a look at two of these. Coming up to midnight, a few hours before midnight, you can see this kind of going sideways. If you just used our trailing stops on the 5-minute chart, I don't have the range chart running on here. The range chart does better. In at 49, out at 52. Very tiny loss. In again here at 46, out at 19. So again, that's a 27 pip win minus your spread. That's more than 2.5 days worth of profit in one trade. Let's take a look at the euro yen last night. Same thing, it's going sideways. If you got in, small loss in right here, 32. It has you out right here at 06. So it's a 26 pip win. And most of the time, you're going to want to draw your fibs on this, and most of the time it's best to kind of get out of half when it hits the first fib target, then the second half here. So in this case, it pretty much has the same exit. If you had decided to sell this little pullback right here, and again, I use the range charts. Let me just showcase this because it's vastly superior. It's the reason why I'm trying to get these to work on our currency meter on the range charts too. Notice this trade right here at 95, out at 74. Nice 21 pip win. When it's underneath the lower white band, the 2.0 band, typically you don't want to sell underneath the band if it's more than 15 pips underneath it. And the 3.0 band is typically where price reverses. There's a 95% chance within 20 minutes, in my experience, this is my opinion, but bring up our charts and see for yourself how few of times, if you look to get out of your trades down there or flip and buy, see how few of the times it doesn't work. It's very, very accurate. So if you had shorted right here at 96 and it comes down and touches this right here, I'd be out right here at 67 versus 75. You make another 8 pips. That's another, almost an entire day's worth of profit right there. If you flipped and went long, let's just say, when it went above here, 74, even if you got out right here at 79, a little pullback right here, in at 79, out at 93, a little bit over 10 pips, and so forth. Now later in the day, the yen and the dollar both became weak, but they both had very strong daily, weekly, monthly trends in the opposite direction. So you can certainly trade those, and I would take the weaker of the two. The yen was weaker than this. The only downside is, previous to that, the yen was much stronger than the dollar. So this is kind of a risky trade. A lot of times I personally will take it. I hate to go over it too often in class because in the hands of an inexperienced trader who hasn't traded for a couple of years, You really got to be nimble on your feet. Don't be expecting any 30 and 50 pip wins when you're going against a longer term trend. If you want to take a trade, realize 10 to 20, maybe 25 pips is your maximum profit. Usually an hour to 2 hours max is how long it could be a week before getting strong again. Because the longer time frame trend it is the number one strongest trend on all time frames. So if you wanted to sell that there around 430, the yen, what's the strongest one at 430? Well, it was the Australian. So, and at least this one, has a weekly trend that's up. It shifted up at 3. So at least one of these time frames is up, rather than the Swiss and the Euro has all time frames blood red. All right. So try to take the ones that make the most probable sense. 430, we want to look for buys in the Australian yen. Here's 430. This is kind of it had a double bottom right here. It went up and it went sideways. So pretty high probability trade. Breaks out right here. Most of the time, weak currencies like this, because it was weak earlier, is going to go up to the fib target. Usually the 1.618 is the maximum profit you're going to make. And that happens to be right near the hourly moving average, which is also a resistance area. So myself, I would have just got out of this at the 66 level. But you would have been in this at 35 and made 31 pips minus the spread. That anytime you see a trade that has a good chance of making 1.5 to 2 times more profit than what your risk is, and I would have put the stop right underneath the little sideways lows right here, maybe somewhere around 19. So we're in at 35. It's got a 16 pip risk, so 1.5 times that would be 24. This is your first profit target. It might stall here at 56. So it's about 21 pips. It doesn't quite meet the 1.5 to 1 risk reward, but most of the time when currencies are down too far, they'll work their way back up to the hourly. So, if the trade works, it's really kind of somewhat 50-50 whether it'll stop here or go to the hourly. And this one went a few pips above the hourly. So once you get into that trade, you can watch it. If you see real-time strength come in, then, hang with it. It's clear that this is the most strength it's really had all day. It's only 4.5 hours into the day, but, coming up to 5 right here, it's the most strength. It never hit this level right here at that particular, during today. And you can always get in, take your 10 pips on half, and then trail the second half, which would have had you out right here when the trailing stop got hit at 66. That's perfectly fine too, and I do that all the time. Probably, I'd say 70% of my trades I exit half when the market either goes sideways or I don't get a good feeling about it. I give myself the latitude to be wrong the first half. I never beat myself up if I get out 20, 30, even 50 or 100 pips too soon. Doesn't matter, because the whole point is if you make pips on winning trades and you get out of trades too soon, there's a ton of times I get out because of intuition, and I would have had a losing trade and I would have made 8 or 9 pips by following my intuition. If it goes up and goes sideways, I get a bad feeling for it and exit half. Half the time I'm right and it comes down and I would have had a loss rather than 10 pips on half. Usually I'll break even on the second half. So if you make 10 pips on half, lose, or I should say break even on the other half, you've netted 5 pips. And 5 pip win versus having a break even or a loss on the entire position is a good thing. It gives you the confidence to pull the trigger the next time you see a trade that maybe you're not 100% sure of. So you should try that. If you find yourself giving back profits and having losses instead of profits, try that strategy. And if you're in a trade and you feel a lot of nervousness about the trade, just exit half. If you're up, even 6 pips and it looks like it's going sideways and our tools are not showing, in this case, our tools were telling you it's probably likely to go higher. It had been going down a very long time, and from the high up here to the low, you draw your fibs. Most of the time, it will retrace at the minimum to the 38% retracement, which is right here. 83.50 is a minimum. Most times, it's going to go. And so it went sideways right here. It's up to you whether you get out of half, but then follow it all the way up. And notice it went right to the 61.8% fib, and there's a weekly pivot there. That's the end of the move, because all the time frame trends are down.